Something is breaking inside the UK housing market, and most people still haven't noticed. One of Britain's biggest house builders has just watched its profits collapse by more than half. Not dip, not wobble. Collapse. And while politicians stand behind podiums promising 1.5 million new homes, the very companies expected to build them are running out of oxygen. This is not just another boring corporate earnings story. This is a warning shot. Vistry Group, owner of Bovis Homes, Countryside, and Linden Homes, has just reported a 55% crash in pre-tax profits, falling to just $40 million in the first half of 2025. For a company of this size, this isn't a bad quarter. It's a structural shock. These are not fly-by-night developers. These are the names that built modern British suburbia. The companies that politicians quietly rely on when they make grand housing promises. And now, even they are struggling to stay upright. When a giant like this stumbles, the ground shakes for everyone. First-time buyers, renters, homeowners, and investors alike. Walk into estate agents across the UK right now, and you'll feel it instantly. A strange silence, a frozen atmosphere. Buyers aren't rushing in. They aren't negotiating aggressively. They aren't confident. They're paralyzed. People want homes, but they are terrified of affordability. For months, we've been told to wait for interest rate cuts. That relief is coming. That confidence will return. But here's the uncomfortable truth. It hasn't worked. The Bank of England can hint all it wants. Buyers are still holding back. They're waiting for a moment of clarity that may never arrive. And while they wait, the entire housing machine is grinding to a halt. Builders can't sell, so they slow construction. Suppliers lose contracts, sites sit idle. Developments are paused or quietly shelved. This isn't fear, this is calculation. Buyers have done the maths, and the numbers don't work anymore. Now here's where the story gets dangerous. The UK government has committed to delivering 1.5 million new homes by 2029. That means roughly 300,000 homes every single year. On paper, it sounds bold. Ambitious, responsible. In reality, it's starting to look detached from economic gravity. Because the very builders meant to deliver this promise are reporting shrinking order books and collapsing margins. Vistry's struggle isn't isolated. It's a flashing red warning light. You can announce targets, you can shout numbers, but if builders are bleeding cash, who exactly is going to build these homes? This is not a temporary slowdown. This is a market seizing up from the inside. And the consequences are only just beginning. What we are witnessing right now is not a cycle, it's an affordability breakdown. For years, UK house prices have raced ahead of wages. That gap has now turned into a canyon. Even with potential interest rate cuts on the horizon, mortgage costs remain far higher than the ultra-cheap money era people became used to. A generation of first-time buyers has been quietly locked out. The very people meant to buy new homes, young professionals, growing families, simply can't afford them. Not because they're irresponsible, not because they didn't save enough, but because the maths no longer works. You can only stretch a salary so far before reality snaps back. And when the natural customer base disappears, builders are left holding developments nobody can buy. But here's the twist most people miss. When builders stop building, supply tightens even further. And when supply tightens in a country already short of homes, prices don't fall. They fight back. Fewer new builds mean more competition for existing homes. More competition pushes prices higher, and the rental market feels the squeeze immediately. Landlords may see short-term gains, but long-term instability helps nobody. Renters face rising costs, buyers chase shrinking stock, homeowners feel wealthier, until they try to move and realize they're trapped by the same inflated market. This is the paradox of the UK housing crisis. Nothing feels affordable, yet nothing corrects. Across the industry, builders are being crushed from both sides. Construction costs remain elevated, planning delays drag on, regulatory hurdles add time, risk, and expense. On one side, government pressure to build faster. On the other, market conditions that make building unprofitable. Some smaller developers have already walked away, and when smaller players exit, competition disappears. The market concentrates, prices become stickier, and choice vanishes. For ordinary people, the impact is brutal. First-time buyers face a narrowing window that keeps moving out of reach. Renters face relentless upward pressure. Homeowners find themselves asset-rich but mobility poor. This isn't a 6-month problem. This isn't a 1-year correction. These are structural issues that could define UK housing for the next decade. Vistry's 55% profit collapse is not just about one company. It's a symptom of a housing model stretched beyond its limits. caught between political promises and economic reality. The question is no longer if this will affect you. It's how soon and how hard. Because when the builders stop building, everyone pays the price. And right now, the message from the industry is painfully clear. The system is broken, and nobody knows how to fix it. Here's the uncomfortable truth no one in Westminster wants to admit. The UK housing crisis is no longer a problem of planning. It's a problem of credibility. Every election cycle, housing becomes the same recycled promise. More homes, faster building, fixing the crisis. But promises don't pour concrete. Builders do. And right now, builders are quietly signaling that the numbers don't add up. The 1.5 million homes pledged sounds impressive, but it assumes a functioning private sector willing to take massive financial risk. It assumes confidence, stable demand, predictable costs, and buyers ready to commit. None of those conditions exist. Instead, builders face a market where buyers hesitate, financing costs stay elevated, and planning delays stretch projects into financial black holes. So what happens? Developers protect themselves. They slow down. They pause. They wait. Not because they want to, but because survival comes first. This creates a dangerous illusion. Politicians announce targets. The public expects delivery. But behind the scenes, output quietly shrinks. The gap between headlines and reality grows wider every year. And when those targets inevitably fail, the blame game begins. Developers are accused of land banking. Councils blame planning systems. Banks blame risk models. Meanwhile, ordinary people are left waiting for homes that never arrive. This is how trust erodes. Once buyers lose faith that supply will improve, behavior changes permanently. People rush when they can. They overbid. They stretch themselves dangerously thin because they fear the next chance may never come. Ironically, this fear-driven demand keeps prices elevated, even in a struggling economy. The market becomes emotionally charged instead of rational. And that is the most dangerous kind of housing market. Many people are still waiting for a housing crash. They believe prices must fall because affordability is broken. Because builders are struggling. Because the economy feels weak. But here's the reality. Prices don't fall easily in a supply-starved system. When construction slows, scarcity intensifies. And scarcity is price fuel. Even if demand softens slightly, the lack of new homes acts like a floor under the market. Sellers don't panic, they wait. Listings dry up. Transactions slow, but prices stay stubborn. This creates a misleading signal. People see fewer sales and assume prices are collapsing. In reality, the market is freezing, not falling. And frozen markets hurt buyers more than sellers. Why? Because choice disappears. Instead of negotiating on many properties, buyers compete for the few that come up. This keeps prices elevated and pressure high, especially in desirable areas and cities. Renters feel this first. With fewer new homes entering the market, rental supply tightens. Demand remains strong, rents rise, and suddenly, saving for a deposit becomes even harder. It's a vicious loop. Higher rents reduce savings. Lower savings delay buying. Delayed buying increases rental demand. And the loop tightens again. This is why the housing crisis feels endless, because it feeds itself. Without a surge in supply, not promises but real homes, nothing fundamentally changes. So where does this leave you? If you're a first-time buyer, the next few years will test patience and strategy. Opportunities may exist, but they'll be uneven, local, and fast-moving. Hesitation will cost more than ever. If you're a renter, expect continued pressure. Rent reductions will be rare. Stability will come at a premium. Flexibility may matter more than location. If you're a homeowner, price growth may continue, but mobility will feel restricted. Trading up won't feel easier, even if your property rises in value. And if you're an investor, this market rewards caution and long-term thinking, not speculation. The big takeaway is this. The UK housing crisis is no longer just about affordability or supply. It's about structural imbalance. Political ambition is colliding with economic limits. And until that reality is acknowledged, not in speeches, but in policy and incentives, the pressure will remain. Vistry's profit collapse isn't the end of the story. It's the signal flare. The system is strained. The pipeline is clogged. And the people at the center of it all, buyers and renters, are the ones absorbing the impact. The question now isn't whether change is needed. It's whether it will come before the consequences deepen even further.